Okay, everybody, welcome to Module 2. This is going to be about auction market theory and market context. So what is auction market theory? You'll also see it as AMT. So auction market theory says that markets are not random price behaviors, that they're dynamic auctions taking place in every single market. Buyers and sellers negotiate price through bids and offers, right? Buyer is putting the bid and the seller is offering a price on the ask. AMT teaches us to interpret this auction behavior. So where is fair value being accepted, right? So where is everybody agreeing on price and lots of deals are being made, right? It's a popular price. Lots of buyers want to buy, lots of sellers want to sell. This is a great price. We all want to do business. And then where is price exploring a new value area, right? So sellers aren't as interested as selling here, but buyers are. So there's more buyers than sellers and price moves up until we find some equilibrium of sellers stepping back in and we find a new value area. And the same is true to the other direction. So it's not about predicting price. It's about understanding price behavior. So the core concept I want you guys to wrap your heads around is balance versus imbalance. And every single price chart we look at is telling one of two stories. Either we're in balance, which is the fair value, where price rotates in a tight range. You might hear it as consolidation or sideways or ranging conditions, but this is fair value. This is where buyers and sellers generally agree on price and value is being established and people are looking to do business, both the buyers and sellers, and it's popular. Imbalance is the other condition, and that's where we're in price discovery, and that's where either the buyers or the sellers are dominant, one or the other. So in this condition, price is going to move away from that fair value area, and we're going to go in search of a new area of agreement. All right, so we will have a value area. We'll range for a bit. Eventually, we'll break out and move and trend in either direction. And eventually, we'll find a new value area where we'll rotate and consolidate and move sideways and build a new popular area of price. So when you recognize this context, this is how we determine what trade setup we're going to use. So how does balance form? All right, this is when buyers and sellers are active on both sides of the market. Price moves back and forth around a central zone. All right, this creates a value area, typically around the Vwap or the point of control. This is the most popular price area in the value zone. So you can expect in this very popular area to see traps and false breakouts, mean reverting behavior. So we try to leave the area and we snap right back in, rotation between the VWAP deviation bands, and we just can't seem to break out of that area. So after we spend time in that balance, how does imbalance eventually begin? Well, that's when one side eventually takes control. It's often triggered by news. There can be a shift in volume or a structural break. And this is when price leaves the current established value area. This begins a vertical auction, a directional movement as the market searches for new acceptance in a new value area. Think of it as the market asking, is this price acceptable? No, we'll keep going, right? If they say this price is acceptable, we continue, right? We're finding acceptance. If this price is not acceptable, we'll go back to the previous value area. Now, this is an interesting concept around many of these indicators and auction market theory, and this is that of fractality. And this behavior is fractal, and these patterns repeat on all time frames. All right, balance and imbalance are fractal. All right, they happen on the 5-minute, they happen on the hourly, they happen on the daily, the weekly. They happen all the way down to the 5 and 10-second chart. We can have these little micro ranges form on the 1-minute. We can see these ranges forming with a daily, weekly, monthly, or even a yearly VWAP band structure. We can see this with daily composite volume profiles, so where value has been built over multiple days. We might see on a 5-minute chart that we're showing balance, but on the hourly, we're in price discovery. Okay, so lots of things are happening on different time frames, and the same behavior repeats across all time frames in different ways. Now, I trade the 5-minute chart, but I always stay aware of the larger context. If you ever join me on my live streams, I have the daily chart up. I have a hourly with a weekly and monthly VWAP band set up. I have a 30-minute with the composite volume profile from the last several days. And then I have my 5-minute chart that I execute on. So I always am mindful of the higher time frames and what's happening. So why does this all matter for your trading? All right. So if you know what phase the market is in, you can stop guessing. All right. You don't have to guess anymore. When you're in balance, we fade the value area extremes and we expect the reversion trade. When we're in imbalance, we ride the trend and we avoid fading. This simple framework eliminates randomness. It tells us when to trade, and more importantly, when not to trade. So how does the auction develop over a session? And the session evolves in stages. We have the opening auction. So that's in the US stocks, that's 9:30 to 10:30 a.m. Eastern Standard Time. It's volatile, emotional, and we have our initial balance forming. That first hour of trading kind of sets the tone and the intent for the rest of the day. We have the midday balance where the market often slows. We can see some ranging and consolidation. And then we have our afternoon discovery. We can see a trend resumption, or we could see a failed auction. All right. These are often key reversals or breakouts here. So when you know where we are in the auction lifestyle, this helps to anticipate what type of behavior we're going to see in price. And there will always be structure clues that tells the entire story. Yet you don't need a crystal ball, guys. You just need to know what to look for. All right. Are we building volume on the volume profile, a distribution, a high volume node? That's balance. Right? Are we rejecting price quickly? All right, that's imbalance. Is VWAP flat or is it angled? Is price inside or outside the initial balance, the first hour of trading? All of these clues tell us which setup is most likely to work in that condition. We prefer this type of structure over lagging indicators. All right, most retail traders rely on these lagging indicators like RSI, MACD, Bollinger Bands. All right, this tells us where price has already been, moving averages. All right, this is old data. All right, we focus on current data. All right, I want to know what's happening right now with price in the auction. Do we have price acceptance? Do we have a volume distribution? Where is the VWAP and how is it sloped? Behavior around well-known value zones and its edges. This all gives us real-time information, not the delayed signals offered by those old indicators. So we look at the volume profile and VWAP, initial balance. These are all auction tools. All right, the volume profile shows where the auction has already done business and where the most popular price areas are and where the unpopular edges are. VWAP shows where the value is forming right now. When you combine them, you can identify balance areas pretty easily and spot where price is being accepted or rejected. And this is how we know where to engage or where we just sit tight and wait. So in summary, this is the lens we use to see the market. Everything you'll learn in this course is filtered through the lens of auction market theory. When you open a chart, your first question always is going to be, is the price balanced or are we imbalanced? That answer is going to give you the setup and the play that we're going to take. If we're in balance, we're going to fade the extremes. If we're in balance, trade with the break in the direction of the breakout. You don't predict. All we're doing, our one job is to react to structure and trade our named setups. So up next, guys, in module 3, we're going to go over the tools we use to see this in real time. All right, we're going to use the Vwap with deviation bands. We're going to have a volume profile with its value area and point of control and its distributions and its high volume nodes. We're going to have the initial balance and its high and low and its extensions. And it's important that while these tools are kind of listed under the indicator section of your platform, they're really not indicators in the traditional sense, like a moving average or a RSI. These are going to be our auction lenses. This is how we're going to view the auction. So in module 3, I'm going to break down each one, how to use it, and how they all work together. All right. So I will see you in module 3.